Hello everyone, I'm Mojtaba Rasti from Thales Group, and you're watching a series of Bitcoin analysis videos using the Thales Market Screener 2. In these videos, we try to predict Bitcoin's future behavior using options market data. Please note that these analyses are for educational and informational purposes only, and if you use them to take a position in the market, you are solely responsible for any profits or losses. Today is October 11th, 2025, and let's take a look at the 4-hour time frame. As you can see, after the sharp and significant price drop we experienced just yesterday, plummeting down to around 102,000, clearly showed that buyers actually demonstrated their considerable strength and effectively pushed the price back up above this crucial ascending trend line. The 4-hour candle ultimately closed above this important trend, and on the daily chart, you can also clearly see that yesterday's daily candle also closed above this very same trend line, which is indeed a very positive and encouraging sign. Today's candle also seems to be forming quite distinctly as a hammer, actually taking its definitive shape right now. Break time equals 0.5s/. So, based on this current analysis, we fully expect that in the coming hours, there will likely be a significant upward move to completely fill this particular FEG gap, potentially reaching up to around 115,000 or even 116,000. Following that, we will probably see another subsequent move downward. Alright, let's take a look at the Market Screener tools, the Market Screener tools feature, and see what the price conditions look like for tomorrow. I'm considering the incoming trades from the start of today up until now and the expiration date. So, the 12th, which means tomorrow. I'll also set the database to the raw database. Alright, 5,773 Bitcoin out of 6,196 Bitcoin have been traded as 4,434 option contracts here for tomorrow. If we look at its chart, it looks like this, a chart that resembles a long straddle where the possibility of movement in both directions has been considered, both upward and downward. Call buyers actually see profits above 115,000, which, given the current technical situation, meaning a bullish trend is forming, a correction is taking shape upward, we can expect this move to continue up to the level where the call buyers have targeted, 115,000. On the downside, put buyers see profits below 110,000 and 115,000. So we can also consider this as another important level on the downside. If we check the process database, you'll see that with 2,882 Bitcoin, it gives us an overall bullish structure. On the bullish side, our curve is actually much steeper compared to the bearish side, and it's in profit, staying profitable. So here, too, we can interpret this curve as having a bullish expectation. If we zoom in and look at the middle part of the curve, you'll see that, over a shorter period, there's a fluctuation between 108,600 and 115,000. On the chart, we can see that we're currently moving toward 115,000. Above 115,000, it goes into loss, and below 108,000, the curve also goes into loss. So, in the short term, we can expect fluctuations between these two values. Well, as you can see here, we've overlaid the curves of auction buyers and auction sellers so we can look at them simultaneously. As you can see, these two curves intersect at the point of 115,600, and this intersection is above the break-even line, meaning it's in profit. The lower intersection is at 110,600, which is in loss. So, again, we can consider the probability of an upward move here to be higher, and we can expect an upward movement in the coming hours. Notice that here, buyers are in profit above 115,400, and sellers, as you can see, don't want the price to go above 116,000. So, this zone that you see between these two intersection points is actually the area where buyers and sellers agree. They consider it likely that the price will actually be realized and seen here. So, again, this could be another indication of a possible upward move in the coming hours. Pay close attention that if, in addition to tomorrow's expiration, I also add the October 13th expiration, the shape of the curve doesn't change much. There's still a possibility for movement in both directions. But if I deactivate tomorrow's expiration, you'll see that today's trades for just tomorrow's expiration can be interpreted as bullish. The curve enters profit from 113 and above, meaning it wants profit above 113. And if you look at the delta, you'll see that as the price drops, starting from around 110,000 to 111,000, the delta increases with the price decrease. This means we're seeing the selling of put contracts, which actually indicates a price floor. Meanwhile, on the upside, you can see that there's a slight increase in delta with the price rising up to about 118,000, which supports call buying for 117,000 to 118,000. So, in the next 2 days, we might even touch 118,000, and we can interpret a bullish outlook for the next day or two from these curves. But for the end of the week, if we consider today's trades for the October week expiration, you'll see a curve similar to call selling, with about 11,500 Bitcoin traded, indicating that we've reached a price ceiling. Of course, the peak could go up to around 115,000, as you can see, and this upward movement we're seeing could likely stop around 115,000 and then head downward. How about that? On the downside, as the price decreases, we see a decrease in delta down to around 107. So, in fact, by next Friday, we could see a move lower, possibly down to around 108 or 107, and once again see those lower numbers. Alright, let's take a look at the detailed trades. The detailed trades we filtered for tomorrow's expiration. You see, we have 6,196 Bitcoins traded, which are in the form of buy and sell contracts. If we deactivate the sell side, we see that out of this number, 3,628 Bitcoins are call contracts, of which 1,800 are call buys and 1,820 are put buys. As you can see, they're almost exactly equal. However, if we actually turn the clock back, we notice that if we go back about 15 or 16 hours from around this candle, from this point, that's when the contracts were entered, based on the entry time we have for the contracts here. They entered from here, and once they entered from here, the call buys were realized because, as you can see, we had a drop, so the put buys were realized. So basically, with this green candle, now it's the call buys on that side that are about to be realized. Our call buys are 1,800, and according to this chart, anything above 114 is profitable. So, we can expect a move upward. Now, about the sellers. We have 2,567 Bitcoin sold here, out of which 1,273 are call sells and 1,294 are put sells. Again, just like we mentioned for the buyers, the same point applies here. These are the put sells that were realized because of the downward move we had. Now, it seems like the price is moving toward realizing the call sells, meaning the number is around, look, that 114 we mentioned, around 114 or 115 could be the ceiling for this upward move. That could actually be the ceiling for this bullish move. Alright, in the process database, actually, we come here and set the open interest to 1 so that it only shows us new contracts and entries. You can see there are 2,224 Bitcoins. We change the size to see how many of the trades are with large sizes, for example, 20 Bitcoins and above. Here, we can identify block trades, which reveal their own strategies. For example, here we have 2 block trades with numbers, and if we look at them together, we can see they show us a long strangle structure with a floor at 102 and a ceiling at 119. This contract is a neutral strategy and actually anticipates movement in either direction. Right now, we're moving toward the ceiling of this strategy, which is around 119. Another strategy we have here is also 2 block trades, again a long strangle from 102 to 119. Here again, you can see 2 trades with the same number, and here the trader is dealing with a short straddle. Price stagnation, price stop is what they want, and its fluctuation is between 110,000 and 114,000 so that they can actually collect the premium. Here too, we are moving toward 114,000. And these two again are basically a short straddle, with the same definition we provided earlier. And this one is also a long strangle, which is from 102 to 109. In fact, we might be able to attribute these long strangles to the beginning of the week, meaning Monday or Tuesday, when the trader expects increased volatility and a move in either direction. But these short straddles probably indicate the outlook for tomorrow, meaning a fluctuation between around 110 to 111 to about 114. Alright, let's also take a look at the liquidation map, the liquidation heat map. If we look at this map for the past 24 hours, we can see the distribution of liquidity around the price. As you can see, the price has moved upward to consume the liquidity above, and right now, at the level of 113,000 to 114,500, we have liquidity on the upper side, which is closer to the price and seems like a more reasonable target for the price. On the lower side, we have a concentration of liquidity down to 108,000. So, it seems that in the coming hours, we might move upward, collect the liquidity up to around 115,000, and then move back down again, possibly even to 108,000. Thank you for your attention.